Hey everybody, welcome back to Generating Income. My name is Mike Fairburn. Great to have you on board with us today, folks. Where within this class, we do look at ways to generate income from dividend-paying stocks, as well as sometimes covered calls and short puts. Today, we're going to talk about the concept that some traders, investors refer to as double dipping, and specifically that is, selling covered calls on dividend-paying stocks and maybe generate, hey, if you can, try to generate two sources of income as opposed to just one. But we'll talk about that today. Plenty to look at. We'll definitely break it down to some stocks to look at specifically that might be potentially setting up for an extended run or at least a neutral trade, which is what we'll oftentimes look for with a covered call anyhow. So I'll look forward to going through that with you folks. And joining the chat by James Boyd. There he is right there. You'll see him as JB in the chat. Knowledgeable on this topic. It does teach some other classes as well. So great to have you all here and excited to get started. So let's do that with some disclosures real quick. Options carry a high level of risk. They're not suitable for all investors. Now, certain requirements must be met to trade options through Schwab. Some additional points listed on that slide up top. Information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Covered calls provide downside protection only to the extent of the premium received and limit the upside potential to the strike price plus premium received. Okay, but that's the extent of it. The Paper Money software application is for educational purposes only. Successful virtual trading during one time period does not guarantee successful investing of actual funds during later time periods. Market conditions constantly change. Investing does involve risk, including loss of principal, and past performance of any security strategy does not guarantee future results or success. Let's see a final slide in here as we look at. Okay, a couple of points here because there are a couple of stocks we're going to be looking at that are REITs. I just wanted to mention that the risks of REITs are similar to those associated with direct ownership of real estate, such as changes in real estate values, property taxes, etc., as you can see there. Now, there are risks associated with investing in dividend-paying stocks, including, but not limited to the risk, that stocks may reduce or just stop paying dividends altogether. Short options can be assigned at any time up to expiration, regardless of the money amount. An ITM option does have a higher risk of being assigned early. Okay, a quick look at some of the option Greeks in there as well. Well, let's do this. Let's just turn over to our discussion here and share our screen. We got to do that first. Somebody just pull that up. Looking at the markets now, folks, the first thing you might recognize with the markets here as we take a look at it, well, that's the S&P 500 index. And as you can see with that index right there, well, prices have been extending higher, and we did see a recent bounce up through this range and a possible hold of support right there. Whoa, we defaulted to a pink there. There you go. But so a little bit of a bounce off of that level, but generally speaking, think about this: the year end, and we spent plenty of time talking about the potential for, let's say, for example, a year-end rally. Sometimes, that does occur on a seasonal basis. On average, that tends to be the case. Well, what are we getting here? We're getting a break above resistance and the possibility of a bounce off of support. Resistance, support. If you look at this with the trend, the underlying trend in place, folks, what are we getting here? Yeah, there we go. Let me know if that works okay. And so with that, what I was just going to state is, with this point, is there the possibility of a flag pattern coming in here? And by the way, what are we seeing in the market that might tie in, dividend stocks specifically? How do they tie in to this scenario? How have they been doing recently? And then on top of that, what do we get in terms of the possibility of option premium here too? So a couple of things to look at. When we talk about option premium, one of the key issues that we do focus in on would be something like the VIX, right? The volatility index. And we want to oftentimes when we're looking at options, we want to compare them to the VIX itself, and preferably, all else equal, the more implied volatility we have, the more option premium we're likely to have too within the trade itself. And so, in terms of the option premium itself, the volatility is high, all else equal, those values of those options could be relatively higher as well. And preferably, maybe we're looking something higher than the VIX right now. You can see the VIX was up to about that 20, just under 25. I guess you'd say under actually about 23 range here, but we've dipped back down to about 16. So just put that on your radar as well. We're going to go into that in just a second. So having said that, what is the one thing, folks, when we look at stocks in general, though? When we take a look at stocks within the S&P 500 or, someone within the NASDAQ, whatever the case might be, if we are looking for dividend-paying stocks, in many, many cases, and we've talked about this before, if we pull this over here off on the left-hand side and we select, say, the Dividend Aristocrats list over here, and we know what the Dividend Aristocrats, we click on them. A lot of the companies, here's a good example, over time, and they don't always do this, but over extended periods of time, one of the reasons they've been able to increase that dividend is the company's been able to grow enough to pay the dividend. And so you'll get this longer term trend to the upside. And I think that could be a very, very important and useful kind of an indication, technically speaking, for buying, all else equal, that is, a dividend paying company that might continue to raise those dividends over time. What does that trend look like? I've got a slope drawn in here. You can kind of see how that extends, but also for covered calls. Covered calls are neutral to bullish. If a stock is going sideways, like let's just say, for example, right through here, I'm going to narrow down this range. So let's just look at this big picture here as we talk about bringing these two concepts together. The stock has been going up, but it went sideways for a little bit here. I mean, a couple months. Well, over that time frame, we didn't make much in terms of the capital gains on the underlying stock itself, right? But what we did do is we made an option. Well, there was a dividend payment there. There was also another dividend payment right there. So there was a form of income we can see over that range. But then also, if we're selling a call, a covered call, you have to own the stock, right? You have to have at least 100 shares of stock to be able to sell one options contract of a standard equity options contract. But if we were selling, let's say somewhere up in this range, I'm just going to go like this and just say selling and just kind of say in here, that might be anywhere in this band right there. If we were selling an option in there, well, prices didn't get above that level. They stayed below it. Now, if we were expecting them to go higher, well, what we could have potentially done is sold maybe a little bit above here. There could be another selling range if we were more, how could we say this? Well, bullish. We could sell a little bit higher because the whole idea here is if we want to hold the stock, we want shares to hold within, and let me just use a different color. I'm running out of colors here, but we've got the old pink. So this is it. So if prices are going up like this, maybe we hold within this range, this lower channel, and we're selling calls at this level. Hey, if we don't get above that, the strike price by expiration, let's just say there's a strike price right here, we'll put another one up here, and then we'll put one up here. If we hold below those levels, whichever of these we decide to select in terms of selling our call against the stock that we own, selling the call against the stock we own, well, this is another way to generate potential income as well. So we've got a couple. I mean, we've got the dividend down here, the div, and then up top, of course, we're selling the option. And so this could be just the option itself, the expiration of the option, OPT for short. But both of these could generate income over a particular range. There's a lot going on this chart because I've drawn so many lines, but hopefully that does make sense. I think many of you understand the concept of a covered call, but I want to approach it initially first, just from the dividend side, initially. And so I want to look at some companies that do have a history of paying those dividends. I pulled them up, and some of them are different chart patterns. We're really going to give kind of a variety of different sorts of stocks that might be setting up, whose charts are setting up similar to the market, the S&P 500. Okay, the S&P 500, as we mentioned, kind of in a position where it could bounce and go higher. We talked about that. Well, what companies could potentially do the same thing? All right, as a quick note too, before we get into this, just wanted to draw your attention up here. I'm going to share this in case you guys don't have it. I think this is incredibly useful, just to have a dividend yield in the upper left-hand corner. I've adjusted this a little bit, and so I've updated this dividend yield. It's just kind of a nice little display to have on your chart if you want it. So let me go ahead and just share that right now so you can have this going forward right here. It is the yield display, and I'm going to share that and put that into the chat box so you can have it. But a great thing to have anytime, we're looking at dividend paying stocks. So there it is. There is the dividend yield detached, and so you can see that up top. All right. You can change the colors in that too. We talk about that in the ThinkScript class on Friday, but you can change the color if you want the color to be different. But that one seems pretty clear, but you can see the yield right there, 0.96. What I want to say too, with any scripts that we do share, they're not guaranteed for timeliness or accuracy, because they're simply just taking the data that's coming into the platform and bam, shooting it out right there for you. So you have that, but thought it might be helpful to have. All right. Nirmal, it is his first live class for the day. Well, welcome to all of you. Good to have you on board. Yeah, definitely any questions, comments, throw those in the chat so we can get going here. But let's actually get going and talk about something that, I don't know, maybe you guys would be interested in talking about. Stocks that might be in a position, dividend-paying companies that have those strong trends that we talked about, but then also might be showing a bit of that flag formation. Now, I've got a couple first I wanted to highlight. The first one here, actually, as we look at it, is a real estate investment trust. Now, this is one that's a little bit longer term, and you can see the strength of the recent strength of the stock kind of holding support and bouncing. Now, I've got others more recognizable names. This is probably the least recognizable name of the one we're going to take a look at today. In fact, I know it is because I haven't even seen it myself really, but it is a company that is profitable, and it has been increasing the dividend at least over this past year. You can see the strength of that. Now, what do we see over here? There is the possibility of a reestablishment of the more intermediate term trend. Now, some traders might want to wait for better indications of an actual change in trend. And what would that be? How about the short-term trend turning higher? Do we have that yet? Some would say, the short-term trend is down. And I might be in that boat because lower lows, lower highs, there's a little bit of a recovery right there. One of the interesting things is you'll find is if you can kind of take out like the last low and hold that, sometimes you're in a position to resume higher. But, have we actually gotten yet here a new high and a new low? What do you guys say? Do we have it yet? How do we know we have a new low, a higher low? We only know we have a higher low when we break this high, because we don't know when that low's, how low it's going to go or whatever the case might be. We just don't know. So this is one that's kind of in the works. This is maybe one of the weaker ones, but I wanted to show it to you because maybe it does have long-term, and I mean longer-term flag potential. Do you see the longer-term flag? It's here, right here. Up and consolidation up here. We don't know, but maybe it will flag and go higher. Okay. So that's kind of a question. We are past earnings on this one. Now let's go to another one that's a little bit more well-known, but not like incredibly well-known. AWK. We're working our way. This is a similar one too. Some of these water companies have been strong as of late, and you can see a little bit of a bounce. Now, anybody recognize this pattern, right, or this candlestick pattern right there? This kind of caught my attention because sometimes this, although I have seen this quite a bit in a trend, like a trend that goes up, you might still see that pattern there. But that right there is referred to as a hanging man. It doesn't have to be a resistance level, but it's interesting. We don't know if we're quite there yet, but we're starting to just curve a little bit here for this waterworks company. Now, the dividend shot up quite a bit, right? Now, the last dividend was in the 5.5% range too. It was a real estate investment trust, and that can be high. A lot of these companies I looked at today were in the 2% or higher range, 2% or higher. One of the things with these companies that I wanted to highlight with both of these is that if you come over here to the trade tab, you see that they're in the million share range. That can still help bridge the gap on some of these spreads over here, but these spreads aren't like fantastic. I mean, they're 30 cents. It's not too bad, but it remains about 30 cents across the board. You see that? About a 30-cent spread if we were looking at covered calls on here. You notice over here too, the open interest is very, very weak. 10 I mean, we're generally looking in the hundreds. So could it be a dividend investment? Sure. I mean, it could be. It's got maybe some of the characteristics that traders are looking for. You could look at some of the growth rates, etc. But that's kind of an extent of a move right here. And it looks like it might be starting to get going, at least from the chart. Remains to be seen. But maybe for the covered call, we might not be seeing exactly what we want. Maybe we're looking for that tighter spread. Okay. Okay, so that's kind of a change in trend, possibly. Here is the CME. Now, the CME is more of a breakout, potential breakout type of trade. Now, we did hit a new high today, it's true. The 1 year high was hit today and it was flagged on my system. I saw it because of that. We are past earnings. You can see the dividend coming in here. The yield is actually right at 2%. And this one already has an existing upward trend. One of the issues is we already kind of bounced off the bottom. And so here we are at resistance. Now, I don't know how you guys feel about resistance, but resistance can be resistance. It can remain resistance. I mean, why do they call it resistance? They call it resistance because we're still hitting it, right? There's been a historical kind of record, you could say, of prices hitting a particular level. That's right around 230. Well, we're not too close, actually, to getting above resistance is the way I like to look at it. Do you guys like to buy right at resistance? How many of you, I'm just curious, buy right at resistance? By the way, I'll have to say this, you got to have a lot of confidence to do that because a lot of times when companies, stocks are at resistance, sometimes they will dip and they can dip big, right? We just don't know because prices have been up. But they can also kind of flag and then break out. So I think in a lot, to a big extent, you're not giving up much room is the way I've always liked to look at this. Take a look at this. Just walk through this with me, just logically. If we break out above here and just say we close above this range, well, my gosh, how much have we actually given up? Not a ton. Even James might back me up on something like this, right? Not a lot in there. If I could write it in here, I'd say not a lot of room. We're not giving up a ton. We don't know how fast it could move above there, but sometimes you just get a nice gentle close above there, and then it holds as support, just nice and slow and easy. It doesn't break out a lot of times. Then you can just it finds a support level at resistance, then it goes higher. So sometimes waiting, you can be rewarded by patiently waiting just to see what happens there. Okay. Believe it or not, these were not even the company. I mean, I wanted to show you these. This one has a totally different profile in terms of, the volume traded and, the open interest. And you've got a lot of times you got volume here, you got open interest, but it still doesn't really check out that much. These are a little bit wider and it's kind of an expensive stock. So really these don't work that well. Maybe fine for dividend paying companies, right? It's right at your 2% yield, the possibility of a breakout. Here's a longer term move, and you can see the extent of that run. I mean, it's a really long upward trend, possibility of breaking up higher here. Okay. All right. The trend's certainly there. But what we wanted to talk about was really getting into both, right? Where you could do covered calls on these dividend paying stocks. The very first one, now you're going to look at this and you're going to say, okay, this might have the short term trend but also a longer term trend behind it. Here is Bristol Myers right now. Past earnings, we got past earnings here. A couple of different recent gaps. A lot of times when you get gaps like this, it's an indication of internal strength. And a lot of times, if I were to go down here and click on news, you're probably going to see some interesting news events that might be poking up as well, sticking up there, okay? Sticking out on those days. And you can see some pretty big volume on those days. Another indication, that was earnings, of course, you got news there, but some indications of maybe some strength. Now, guys, let's just step back and look at this for just a moment. What is that trend looking like here? Higher highs and higher lows. But if we really break this down and look at this, we've also had a series of minor flag patterns all through this run. Okay, and where we're at right now is similar in terms of what we're looking at, and that's a pretty good move. And that would be actually a K hold, right? A close above the high of the low day, today. No, we didn't. We didn't quite get above the high of the low day. Let me show it to you. But it's still, it may be a K hold fairly soon. You can see there's the high of the low day. We didn't get there. But the case of the point is, still, there are a number of flag patterns here off that bottom. And this could be of interest. Now, a company like this trades a lot more than just 1 million shares. So the higher you get above that million mark, a lot of times you can just get better liquidity as well in there. So let's look at this. What do we've got over here? So we still have a dividend yield of 4.12%. And this is one of these companies that has dividends, extended dividends for quite a period of time. You'd have to go back and take a look at it. In fact, let's just do this real quick. Go to a 2-year and just see if so they raised it. It was 57 cents. Now it's at 60 cents, but it's like 4%. Now backing up over that 2-year, over the 2-year time frame, notice this. We took out a long stretch of highs here too. Could there be additional support there at 55? Well, there could be, right? There are some prior highs in there, but we're not necessarily looking at selling puts here. We're looking at the covered call and the possibility of an entry point that's fairly recent, as in maybe somebody might have seen something like it today. A little bit of a bounce. Now, of course, there's no guarantee it's going to follow through, but we might be getting close, or we might be closer here to the bottom of this trough if it were to break higher. Okay, so we talked about it. What's one source of income here? The dividend. What's the other source of income? The covered call. By the way, these are potential sources of income. We talked about that, right? Just stating the obvious, but want to restate it. Now, both of those sources of income could really pale by comparison when you're talking about the movement of the underlying stock itself. That's why it's so central, so important to make sure that we're finding something that looks attractive to us, not just from a technical perspective, maybe a fundamental perspective as well. We talked about some of these gaps in here, probably related to the news. You might want to go in and just take a look and see what's going on with that. But longer term, we just took out some substantial highs, like yearly highs over here, prior yearly highs over a 2-year chart. We saw that. And now we're pulling back into the possibility of a flag. So maybe the short term, we're seeing maybe the short term strength, the possibility of a setup. Some traders will look at this as a setup, but then also the longer term trend as well. So short term, longer term. Okay. I think we made our point there. Now let's look at this. Let's look to put an example trade on this too. First things first, is we have to own the underlying stock. Now I had an old position on here. I think it was just a short put, but this was a good one because it just still continued to rally higher. Now we've got 12 million shares over here traded, and look over here with me. We're in the 5 figures for many of these options. Or we're on the call side for the possibility of a covered call, right? Now, when we're selling the covered call, oftentimes people use, investors might use a delta of 40 to 20 range. The delta, again, just to get clarification on that, the delta is measured. By the way, for every $1 increase in the price of the underlying stock, the option will move up or down based upon the amount of the delta. So this range over here that you're looking at, 40, yeah, it'll move about 40 cents. We've already gone through that a few times, right? But there you go. So we're looking outside of the range here, but we have to assume that we already own. I don't think I have any shares in paper money on this one. I don't. No, not underlying stock itself, but we have to own the stock first, right, to do a covered call. We have to own 100 shares of stock, at least a round lot, before we can sell any options against it, call options to create a covered call. Let's look at these levels too, as we look at maybe a level where we could sell this, because assuming right now somebody's okay with this as a possibility of a bounce trade, you got your dividend yield. We talked about long-term, short-term nature of the chart, and maybe a possibility of a bounce here. Okay, but where did these deltas line up on the chart if we wanted to try to sell a call option? There's a 16 and 62.50. How do these look to you? The 60, does that look kind of close? What about the 62.50? Maybe a little bit better over here. 62.50. Right, I'm just kind of pointing. It's going to be above our high here. Okay, So that's what you kind of need to determine. Is remember, if the price of the stock gets above, if we were to sell a 60 here, a 60 strike, the price of the stock gets above there by expiration, okay, it's very likely that we're going to have to give up our shares of stock, okay? And so we would still make money from where we're at, all else equal, if that does occur. You know, let's just say it's about $58. It's a little bit off that, but let's just say you get approximately $2 here. You get $2 on the run up above, above 60. You won't make any more gains on the stock above 60. So let's just say $2 on the stock. It's an approximate. It's not quite there where we're at. But then you would also get to keep at expiration, if it does expire worthless, $151 over here if we were to get that, if we were to sell this call option as well. So $2 plus $150, so $350. You can see how that would work. Now, if the price of the stock were to go sideways through here, well, maybe it goes sideways long enough where we can collect another dividend payment, if that's going to come up in the future, if that were to occur. Which has been the consistency. That would be probably the expectation of somebody, obviously trading this. But then also the covered call, you get to collect that too. So if we look at it from that perspective, 100 shares of stock, what would that be? So you get $60 down here. If it didn't shoot up above this level, if instead we go into a sideways range, what does that look like? In fact, I should just write it all out because I just talked about it. So there we go. So plus $1.50, these are approximate levels. So we're just saying $350 if the price of the stock does get called away, right? But if it were to go sideways, and let's just say it stays the same, we'll make it really easy on ourselves. The price of the stock stays exactly where it's at. But what do we gain there? Well, you get 60 cents, right? And then you get $1.50 up top. And that's if the price of the stock just goes sideways through here, right? So we don't get as much, but we don't know what's going to happen. The prices are going sideways, and there's still a way to collect potential income here. Okay. So that is what we're referring to in the two different scenarios as we look at this. So let's do this. I'm going to look at this, and if we were to go out, that was just at 60 cents. But if we go to the 62.50, we get less over here. We get 77 cents, but look how good that spread is, right? It's pretty good. About 6 cents or so right through there. And if we come over here and look at the open interest, we're in the thousands, but you're getting less, but you're also potentially getting more capital gains if prices do shoot up. And it gives you more flexibility. We'll put a line right in the middle here, which is where it's going to be, 62.50 right there. What happens in that scenario? Well, price of the stock goes up. Okay, it goes up in here, but it doesn't quite get above. It holds around that high level, but we stay at an upper range. Let's say we're above 60. We'll shoot right there. We've already made, maybe a couple $100 on the underlying stock. We've made, I think it was, about 75 cents or so. I guess it was actually 77 if we were to get that level. And then potentially down here, if it does that over a longer period of time, we can also collect 60 cents from the dividend. So you got two sources of income, and then you've got a capital gain up top here as well. So these are all the scenarios you want to look at, but a lot of it can be, we're looking at numbers here, but a lot of this can just be determined on, what are our expectations for this stock to move up. But I really wanted to go through it because I think it is important to look at different strike prices, narrow it down, say, well, what does that mean for the capital gain on the stock? What does it mean for the dividend? What does it mean for the potential, income from the covered call, the short call? Okay, so a couple of things to look at. Now, just stepping here and looking at this, what do you guys see as the trend here? If you're looking at either of those two, is there one that really stands out to you here between those two? The 60 or the 62.50? The strength of this trend, I'm just going to go ahead and just say the 62.50. I'm not going to sell it yet. What I'm going to do is come up top here. I'm actually going to buy 100. Now, the markets are closed. So I want to get a confirmation that I'm going to get that I'm filled on that before I sell. But because the markets are closed, we have to wait just to see what it looks like tomorrow. I want to get, a feel on that, but just as an example. It's a paper money account, so I'm not too concerned about it, but I'm going to go ahead and just sell this as well. We should get a fill in paper money on both, but of course, you want to always make sure that you get the stock filled so you're not naked that short call. Okay? Any questions on that? While I'm waiting for questions, I'm going to go to the next stock over here, and let's just look at CPT. Now, it's going to be somewhat similar in terms of a long upward trend, consolidation, run up here, breaking of a new high after earnings. So post earnings, we broke a high. So you got earnings out of the way. Maybe the market has perceived that as some strength, and now you're holding that same support level. I'm going to jump back here and just see if there were any questions on that. I don't think so. We got some winter discussion in the chat. Okay. By the way, there is a feedback questionnaire. Just 2 questions in there. If you guys are able to fill that out, that'd be fantastic. I'll go ahead and just repost that in the chat as well. It's very quick. You have to do it during, let's see, you have to click on it during our discussion, but you could do it after. But yeah, if there's something you like or found helpful, love to hear your feedback there. We've got 3 more stocks to look at here that might be poised for a bounce based on some technicals, according to way some traders look at it. So let's hit that. But by the way, while you're at it, bottom right-hand corner of the screen, if you haven't subscribed already, smash that subscribe button and like today's presentation. If you do, in fact, like it, love to have you on board. Okay. Now, CPT, look over here and you'll see, this is interesting. I highlighted this area. Sometimes you get these sort of patterns out of the base. Can anybody see the pattern that I might be looking at right here? I'm just curious. What do you guys see? Is there a pattern here? I'll give you a hint. This pattern sometimes occurs around a change in trend, and it can be a bottom. Any pattern that you're seeing? There might be more than one. There's one there that's greater, that's above the obvious. I always like to just test and see if anybody's got it. Oh, thank you, Dragon. Appreciate that very much. And what else do we got? What are you thinking, Mike? Dragon Rider, David, others? Any other patterns that we might be seeing here? I'm going to draw it out because we don't have all. There's a little bit of a delay in the chat too. But look at this. Keep an eye on these patterns. They're very interesting. Shoulder, head, shoulder. Do you see it? Head and shoulders inverted pattern. Inverted head and shoulders pattern, or head and shoulders bottom pattern. Okay? There could be a neckline that you could see right there too. Possibly. Now, are we building? Are we building off of a longer term trend? Question. What do you guys think? Is that a longer term trend up? It's up. In fact, this indicator down here that I built, the momentum of money flow, is above the 70 line. And it's been holding above the 70 line. And that gives an indication that both RSI, it's a combination of RSI and money flow, that you've got an extended, well, you got a combination of 2 things. You've got momentum that's been supported by volume. And when I say volume, I'm talking about buyers relative to sellers according to how money flow calculates it. So oftentimes that can be an interesting sign that if you get above there, the trend may be longer term still poised to go. That's all. Okay, you see it now? There you go. Yeah, it takes a little while. By the way, Jay Richard says, yeah, small V shape. Yeah, you do see that V shape. We see it right over here. Right there. But there is your inverted head and shoulders pattern with the V. You guys like that? There's a little bit of, when you get an inverted head and shoulders pattern too, one side of it is a flag. Let's call it what it is. It is a flag pattern. Has it followed through yet? Well, we shall see. But the timing is of interest. It's of interest there. You guys see it? Oh, cup and handle. Very small scale, but I see it, Rocky. That's a good catch. Yeah, I'm seeing a couple of these. David had it too earlier. Thank you. And Lawrence got the flag. Yeah. Yep, you guys got. So that is, I wasn't even thinking about the flag. I'm normally looking at a longer term flag, but look at this. That is a flag. Oh, that's a cup and handle. Now it's a small cup, right? But still, it is a cup nonetheless. And you can see something similar. Sometimes you get patterns in the trend. Look at this. There's your V. And then you go over here. Look at this. Where's your cup? There's your cup. You got the flag in there. It wasn't quite off the bottom though, was it? But look at this. You'll see these guys. If you go through and hit enough of these, Apple has this like historical one that's so interesting. And that's what caught my attention. I said, okay, how did Apple bottom after this? This is like back in, I want to say '09 or something. Go back and look at it if you ever want to see something interesting. It looks something like this. See this here? Shoulder, head, shoulder. We're building these patterns on dividend paying stocks. It's got a 3.4 dividend yield right there. And where was that at? Was it at an interesting bottom? It was the bottom of an actual longer term flag. That's the flag. Let me highlight it. There's your flag. And within your flag, you had your head, shoulders, inverted head, shoulders. And by the way, that is a face. You see the face? Shoulder, head, shoulder. All right. Enough of the jokes. But you do see it right there. Okay. So it is after earnings. By the way, something was positive on the earnings because it ran. This is another REIT. There's two REITs we looked at, Vici earlier. Look at some of these. I'm going to go through because we got a couple of stocks to look at. But shoot. Can we do the covered call? Folks, we cannot really do there is no open interest. Even going out to, January, for heck's sakes, we're below 1 million shares. This is not what you want to see. Okay. I mean, you got some people out there. I don't know if these are unsuspecting traders or investors. You never can tell, but there might not be liquidity if you want to try to get out. That could be tricky. We're going to skip over that. Both of the REITs were like that, but I'm not going to keep you stuck there. But I wanted to show you because today it was combinations. Could we do a double dip or not? I've gone through, I've looked at both the REITs. They're not liquid, but still the charts. Remember what we said about the charts? The stock itself can make up so much more room, really, all else equal, than the payment of a dividend, the payment of a call, right? So the stock, by contrast, could be massive, a capital gain relative to each of those. It's just something that's very factual. Okay, now this one here, NRG Energy. How are we doing on this one? Well, it does still kind of have with it. We'll go to a 6-month chart, really kind of narrow this down. But do you see a pattern here of the trend? Higher highs, higher lows. It's got the longer term uptrend too. Case in point right there, clearly. But somebody might be looking at it on a shorter term basis as well. And they might just be saying, well, I might play for a month or two with that covered call and that's it. I'm just looking to try to generate a little bit of additional income if I get the dividend payment as well. Well, there you go. Here's your flag. Here's your flag. Are we flagging again? We're past earnings. Okay. Does this guy have some volume to it? Could we look at this as a potential move up higher? And where might we look at for the covered call? Let's come over here and take a quick look. 2.3 million shares. Okay. Look at the range in here. Okay. So 15 cents, some of these 20 cents. Where does our where do our deltas fit? Kind of maybe right in this range in here. We actually have maybe 3 that could qualify. Where do those put us at? Right there. 100, 110, 105, and 110. So we could use those as an example. And by the way, open interest in the thousands for, it just so happens to be those that we're looking at, those 3 right there. So consider this one. We're going to finish on another one here that actually, and by the way, one thing we had been looking, we talked about this earlier, is that for the calls specifically, look over here. Look at the implied volatility. 36. What was the delta? The VIX at approximately? The VIX approximately was about 16. We're way up ahead of that. So all else equal, you're getting quite a bit here. I mean, look at these numbers for a $94, $95 stock. They just do look a little bit bigger. And I know we're out to the Jan, but still, there's the 36, almost 37. Now, one quick note, I did pull up the Jans over here. With dividend paying companies, sometimes with those covered calls, investors might go a little bit longer term. We didn't take the 31 days. We took the 59 days right there. All right, let's keep going. Let's hit another one in here. And I'm going to go to a full 1 year chart. It's weird. There it is. There's our 1 year. And we'll wrap it up on this one. By the way, that's the 1 year chart of NRG. You can see it right there. But there is, in fact, folks, your dividend yield. Now let's move into the last one. It's still NTAP. Network Appliance, long sideways consolidation. Now, based on everything we've just discussed here, yes or no, would this have worked with a covered call with the dividend in there as well? That's only a 1.7% yield, but if we had sold a strike price through there, a call through there, a call through, I don't know, might not have been that high, but it might have been that high. Yeah, it's been going sideways. Maybe a couple sources of income. There's the dividend. This was kind of as it was still topping, another dividend. But then how many months could we have possibly sold in those strike ranges calls? I'm just going to throw it in because perhaps somebody might have done this. There's 4 months, the stock has done very little, but a trader might have been able to collect, or an investor might have been able to collect potential income from the call options if we didn't go above there. That's just likely the case, right? We said if you get above that level, then you're going to get, your shares are going to get taken away, but you still get to collect the premium as well. So, okay, quick note on this, and we'll wrap it on this. But folks, we are getting into a little bit of a tighter range, and when you have a big run up, and let's just do this again. I've had this on the monthly forever. A weekly is a little bit more helpful. See, you can actually see it better on the weekly sometimes. Do you see it gets tighter and tighter? That's referred to as a symmetrical triangle. And a lot of times you break out of that triangle, but a lot of times you break out of the direction of the trend of the triangle. And here is the trend of the triangle, the pattern. It's been going sideways. But if we break out of that trend, well, it might be to the upside. It might go with the trend. Some traders will say there's a probability behind that. Well, look at the strength we're getting right here. One little issue. We've got earnings right there. Be very, very mindful of earnings because what the covered call, we are buying the stock. We're owning the stock. And that means that if earnings goes like this, well, we still have the stock. There might be some minor buffer that you would get with, let's just say, with the call itself, because you're selling that call, and that could give you some, like I said, buffer to the downside in terms of a credit, or I should say a premium that you might end up gaining, right? But it's going to pale by comparison to the price move of the stock. So that's something to keep in mind as well. But if we come over here and look at the trade real quick, you'll see 2.5 million shares in the hundreds over here and a decent spread as well. Okay, so that's kind of been a theme that we saw over here. And look at this too. Just like we had with NRG, we're in that same 36 range in terms of implied volatility. If we were to go out that far, we don't necessarily need to go out that far if we didn't want to. We could take this one and look a little bit closer, and then you can still see that some of these premiums are actually still quite high. But it's actually, that's a little bit higher implied volatility because we've got an earnings announcement right around the corner. And that can lift implied volatility. So folks, I hope you found this informative and useful, and maybe some interesting stocks just to look at. Keep an eye on, for paper trades there. But talked about both aspects of it. Again, be sure to hit that subscribe button, bottom right-hand corner there. Definitely like today's presentation if you did find it helpful. It helps the YouTube algorithm to kind of literally forces it to keep this kind of content coming up more often for you in your feed. So with that, there is let me just punch it in again here. Encourage you to, if you haven't filled out that survey, very helpful if you're able to do that, folks. But fun being with you today, and we'll look forward to future discussions. Everybody have a good rest of the day.